Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This is where we get everything you need to know in 90 seconds at 9 o'clock, with news that Chinese president is having to get involved in shoring up China's faltering economic track. In China, their official factory PMI fell unexpectedly in October, back to contraction after a minor expansion in September. Markets weren't expecting that. So China's economic recovery remains fragile, with more support measures from the government needed. New orders were weak, returning to contraction there, and the main issue. And it was a similar story in their services sector. It did manage to stay in expansion mode, but only just after dipping from September. The October result is the weakest of 2023. New orders were particularly weak there as well, which is a worry, and they are now contracting in that sector. Meanwhile, President Xi was active in the Central Financial Work Conference, trying to shore up issues related to the ballooning local government debt risks. In Japan, however, yield curve control policies are all the focus. Late yesterday, the Bank of Japan loosened its reins, allowing their 10-year government bond yield to rise to about 1%. But despite that, the yen fell. EU inflation fell more than expected in October, down to just 2.9%, and its lowest since July 2021. This is largely due to retreating energy prices. Their core rate, without food or energy, cooled to 4.2% from 4.5% in September. Meanwhile, euro area GDP shrank 0.1% in the 3 months of September from the prior quarter, worse than market forecasts of a flat reading, and following an upwardly revised 0.2% rise for the second quarter. It rose 0.1% from the same quarter a year ago. Meanwhile, German retail sales were expected to rise in September from August, but they fell in an unanticipated retreat. But American retail sales, as measured weekly by their Red Book Index of bricks and mortar stores, rose strongly again last week, and by more than expected to be 5.3% ahead of year-ago levels on a same-store basis. They are growing handily now, more than inflation. The US Treasury 10-year yield is down 3 basis points today from this time yesterday at 4.86%, and the price of gold will start today at $1,991 an ounce and down another $7 from this time yesterday. Oil prices have fallen 50 US cents to be just on $81.50 a barrel in the US, while the international Brent price has fallen a bit more to $85.50 a barrel. And the Kiwi dollar starts today at 58.1 US cents and down a quarter cent from yesterday. Against the Aussie, we're firmish though at 91.8 Australian cents. Against the euro, we're still just on 55 euro cents. That all means our trade weighted index starts today little changed at just on 68.3. Get more news about the New Zealand economy from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.